Hi there, a very good morning and good afternoon to all of you, depending on wherever you're watching me. This Simply Stocks, and I'm live in this live session with you all as promised around 11 a.m. And hope you all are doing well and your trading and investment journey is doing well as well. And you're able to take trades on both the sides because this is a volatile market. So today I'm going to talk about a very interesting topic. A lot of experts are talking about you can say capital goods or capex related companies doing well over the next one to 2 years. Now these are my reasons, my assessment, and this is only my point of view as to why I believe this sector might not do that well, or these sectors. So this is purely for educational purposes, no recommendation, but I'll discuss as to why capex cycle may not revive at least for the next 12 months or so. What could be that reason? So let more people join in. It's a Sunday morning, hopefully more people will join in. Morning Rakesh, morning Mr. Pawar, Priya, very hello to you. Bhavin, good morning. uh, Gurpreet, good morning to you, and Sayed Tariq, a very good morning to you as well. I hope more people join in this session because this is a very this is a topic. There are two you can say segments of investors that are today working. One believes uh, in the camp, in the same camp that I am in. One believes that export oriented companies and some select consumer oriented companies, consumer you can say not directly related but indirectly related to consumers, may do well. The other believe that these all companies are expensive, IT or consumer related, and so we are going to have a revival of the capex, and we are seeing that happening with the defense stocks, so other stocks will also perform. So that's why I want to give my point of view on this factor. So we'll do that. uh, Varadarajan, a very morning to you. Thanks for the support, for being a member. You can be a member on Patreon. You can be a member on WhatsApp as well if you email me, and you'll get the details for that. And you get all the benefits of Patreon there as well with podcasts, etc. But that's a yearly membership, so kindly take that on note. All right. So let's begin the session. The first part of the session will discuss about the market a little bit, and then I'll then discuss about the main topic as I have told you, and then we'll answer your queries. If you want your queries answered in between, you can probably ask queries with a super chat or super sticker, and I will definitely answer immediately and in a greater detail. All right. So let's begin the session. First of all, about the market. So not much changed in that one day. So on Friday, we had a little bit of move, more upwards. 15,600 got breached. So it looks like that the market will recover. And a lot of people were asking me that whether that 15,250 or so was the bottom, and the market is set to go higher. I believe not. I still believe that we will go at least 1,000 point lower than that. We could head towards 14,300 or so, and that might happen from August onwards or end of July until September. I believe this market may bottom out by end of September or so, because there will be a festive season that will await us between October to February, and that would be a very good season because the pandemic is now behind us virtually, although there are cases rising, but the pandemic is behind us. So hopefully October to Feb will be pretty good, and October will also mark 1 year of decline for all the indices. We have seen the decline take place from October onwards, from 18,600, and probably by October we might end up going to 14,000, and that's a 25% decline from the top, and then the recovery. So the second round of selling will take away all the weak bulls, or you can say the slightly stronger bulls that wanted to be in this market from a 2 3 months perspective and wanted to trade. They might also go out of the picture, and then the big rally will begin, in which people will be more naysayers, and they will say that there will not be a recovery, and things will be bad, and we could go to 12,000, 10,000. All those figures will come in, and the market will keep on marching higher. So, and one more thing I want to say is that is that over a period of time, this problem in Ukraine or this problem in Europe will also get sorted. I think over the next 3 to 5 months, I'm pretty hopeful that things will only get better there. Russia is getting into key places of Ukraine, so it might not last more than 3 to 4 months from now on. And we'll see how things go about. So I think everything might culminate together in order for the market to go higher. Because if that subsides, that war subsides, we could be in a situation where the oil prices may go down below 100, closer to $95, $92 per barrel, which would be pretty significant decline from $139 that it was trading at in February or so. So these factors should combine, and we need two things. We need dollar rupee equation to be in our favor. At least it comes to around 76 rupees a dollar or so. And we need a situation in which the oil prices comes below 100 and preferably closer to 90, $92. That would be good enough. So these two factors, if they combine, and hopefully they should combine by October, we can see a sustained rally. Till then, I'm not sure whether we have made a bottom or not. So that's about the markets. So there's a question. So Gaurav is asking me one thing, and I have talked about this in one of my live sessions earlier as well. I'll just give a one liner on this because these kind of queries do creep in here and there. So it's a pretty valid question. So uh, I am an investor for the last 11 years. I've been investing in the market, Gaurav, from 2011. I took charge of my father's investments, which were there. He was in a public sector company, so he asked me to do that. Before that, I did MBA from US. So I'm an MBA from US, and there I learned that people made big money by investing and trading rather than doing their normal job. And I've talked about in detail as to how that came about. So when I came back from there, immediately after completing my MBA, I started working on this and teaching at the top private universities. I was teaching MBA at top private universities and doing this. So I've been doing this since 2011. I don't want to mention as to how much I was able to make over the last 10, 11 years, but it was pretty significant for me. In terms of returns, I could say I'm able to make between 30 to 40x over this 11-year period, and the earlier invested amount was pretty less. So that is the point. So eventually I've got to a figure where I'm able to probably do this YouTube videos and work on Patreon, client calls, etc., or calls of investors, whoever come to me, and survive on it through trading and investment. So it has been a journey of 11 years. It has been a tough journey. If you people want, I can make a video, a detailed video on this as well, that what all happened through this 11 years and all. But this has been the process over that period. I am not someone who boast about things, or who would tell about, or make fancy videos or anything, and you have seen that in my different videos. I am here to help you out uh, as to how to invest in the market. So that is my endeavor. I hope more people get an understanding of how markets work, because this is not difficult. I have been saying that time and again, that anybody who can put in about you can say 8, 10 years of their time in the market can easily do much better than fund houses. Easily, I'm not saying difficult. It's very easy to do that. It's a game of greed and fear. Simple as that. If you want me to sum up the market in one line, it's a game of greed and fear. Currently there is fear at 14,000. The fear will be even higher, and that is why I'm saying that what I feel from my experience in the market is that we are not in that extreme fear zone yet, and we will get in there when even I will be talking of 12,000. That will be the time that fear will be there. So that is the thing. So that is exactly what you need to understand, that when there is extreme greed or a situation of extreme greed, you need to somehow uh, may take out the money, and when there is extreme fear, you need to pull out all your resources to put in the money. So that's about the market point of view. So that's what I feel, that the market will recover once these two things get solved. And even before that, the market will be around 17,000, 17,500 uh, before all that solves around. So basically, what we need to do as investors, if, and I have said that time and again, if we are having good quality, top notch, debt free companies, hold for 18 months, we are going to make very good money in 2023. If not this year, there could be a chance that between October to December, there could be a ferocious rally. I don't know. That could happen, and in that we'll assess as to what needs to be done. That we'll discuss in December. But till December, we have to be patient with our investments, and these are not times to probably trade unless you are very nimble footed. All right, so I'm ready with the topic. Not to answer your queries, I was thinking that I've discussed the topic, but I'm ready with the topic that I wanted to discuss. So basically, capex and capex cycle means investments of government and private sector into capital goods, into road infrastructure, into buildings, into capital investments, basically into all the fixed assets. Now, it had begun well between 2018-19, during that period of the last elections, that things started to pick up in the real estate sector, and in the capex cycle started to pick up with the road infrastructure and everything doing well. Then we were hit with the pandemic, and for at least 2 years things really did not move as, you can say, envisaged in 2018-19. Now I think things will come back to platform, things will come back on road, and there will be a little bit of a capex driven move through government. But I don't think it will move the needle for most of the infrastructure companies. So if you look at BHEL, if you look at L&T, if you look at boilers company, electric companies who make like transformers, rectifiers, etc., other kind of companies which put in all sorts of, you can say, capex that come in, for that to really move, like the move that we always see in IT or pharma or FMCG or other consumer centric companies, similar kind of move, if we want in that sector, in any capex driven sector, there has to be heavy investment and there has to be work on the ground. Now, with the kind of economic situation we are in, with the kind of inflationary situation we are in, it is extremely difficult for government to spend on these things. Why I say that? It's because they have to spend on procuring more oil. They have to spend on procuring oil at higher levels, because oil is not at $60, 50, $60 that it was trading at for many months. It is at $110 per barrel. Even if, and add to that, the government had to reduce the taxes on oil. So again, the tax figures would be lower, although GST figures are increasing, but the overall tax figures will be lower because they are going to take out less taxes from oil, because there had been a 10 rupee deduction that had taken place. So no matter what you say, it looks prima facie, on paper, looks extremely difficult for expenditure to pick up on the capex front. And if that doesn't happen, this is a, you can say, a high gestation period or a long gestation period kind of businesses. They will take time for you to see on the numbers front doing well. Whereas if you compare it with any consumer centric company, even if you compare it with any diagnostic companies, any kit making company, any company that provides windshields or steel or other kinds of doors, etc., to say automobiles, whether you look at pure automobile companies, auto ancillary companies, any kind of other ancillary companies, Dixon, etc., Demat, and so on and so forth, they will continue to do well wherever, whenever things recover even a little bit. They just require people to have a little bit of more money in their hands. So if the job data in India comes out to be better, if people gets better job, if even if export gets picked up, so IT industry does well over the next year and a half, even then people of India will make a lot of money. There will be more dollars coming into India, and people will be spending more. So there could be a lot of things, uh, one of a lot of things that could go right for these sectors to do well. And there are lot of many parts to the whole wheel when you talk of the capex sector, and that is why I believe capex might struggle. That is one of the prime reasons for that. Ravi, thanks for your contribution. Can TV18 stock make a comeback with IPL rights? Well, it should have by now. Now, what will happen is by April or next year, April, because the rights are from, I think, 2023 onwards. So, I think next April, or you can probably buy it by January, February, and sell by May, June. I think it's a very good trade. It will not have a direct impact on you can say on a sustained move, but you need to understand one more thing, that Viacom 18 has got rights for the World Cup football as well, which will take place in November. So it's going to be interesting. I think there could be a chance that TV18 might end up doing well from September, October onwards. So we can keep an eye on that. So that's a pretty good question. This is one of the stock that could perform because of the World Cup football rights. And now that they have rights for, I think digital, I think they have got rights for the IPL. So it's going to be good for them from August, September onwards. So yes, they can, but I don't know where the stock would be, say 1 year down the line, because if the market remains volatile, then the stock may not move that much. All right. So Varadarajan CCL products, I have not looked at the company for the last 2 3 quarters, but what I feel is that it's a good buy between March to July, August. I don't think that the numbers straight away would come through pretty good. If you are holding, and if you have 2 years time frame at least, hold on to the stock. It will do very well. If you have less than that and you're holding, then you can probably exit on a rally. And if you have not bought the stock, then buy the stock only thinking that you'll hold for at least 2.5 years. All right. So as I said, one of the prime reasons for capex not doing well is just been explained. Another reason why capex, even if the capex cycle picks up, the numbers and everything will come through in 18 to 24 months. It doesn't happen immediately, although the stock prices might move. But then there are many parts to it, as I said. So the numbers would again come down lower, and people might still sell, because you have to understand that when this festive season begins in September, mid September and all, and things start to move up, you will see how Titans of the worlds and DMarts of the worlds and Asian Paints, Pidilites of the world post monsoon would pick up. And then people will move their money where the real returns are coming in. So again, stock wise returns might still be curtailed from a 1 year perspective. From a 4 year perspective, I think capex driven stocks selectively can be bought from a 3 to 4 year perspective, because then the whole cycle might play out. But I am not that confident with the kind of situation with the exchange rates and the way oil is trading, that this expenditure will be so good on the capex, that capex will pick up across the board. Yes, many private companies have increased their capex and have been doing, but this has been happening for the last 10 years. It is not happening for the first time. Sometimes those private capex pick up, sometimes private capex go down, but we have seen how performance of capex related stocks have been over the last 10 years compared to consumer related stocks. All right. Thanks a lot, Santosh, for your contribution. Will DMart fall more? If yes, where should I add it? You should add it now. It can go to 3,000. Very rare chance for it to go to 3,000. But it should be added now. It has gone down from 7,000, 6,000 to 3,200. There has been a good 30%. Is it a 30%? It is more than that. I think there has been a good 45% dip in the stock. It's a clear buy at these points, in at these levels, something like a DMart. But again, your time frame matters. Your time frame should be between 1.5 to 2 years when you buy now. The returns could happen in 6 months, then you can exit. but you have to be patient between 18 to 24 months. That's the call. All right. So that's the basic part about the capex thing, and it is extremely difficult to probably forecast what could be the earnings in the capex driven stocks. Plus, the PE for such stocks are always less. So all capex driven stocks normally at their highest PE would trade at 20-25 times, whereas consumer centric stocks at their highest trade at 70 to 80 times, and they have also come down. So consumer centric stocks are not trading at their high PE. They have come down. I'm not talking of the HULs or the Daburs of the world. I am talking of, as one query has come in on a Polycab, something like an Astral. You look at VGuard, you look at, and these are not recommendations. I'm just putting up, I'm just thinking which could be those companies. These are all ancillary consumer companies. You look at a Dixon, although I still feel it is expensive at this point of time, but it has come down from the top. And many other companies which are more consumer centric in nature, a Century Plyboard, and many other companies in different sectors has come down appreciably. So we have to look at that, because these sectors will again come back and these stocks will again trade at high P. Yes, at the moment they might not, but 2 years down the line, I'm pretty confident they will. Although people do say that they are expensive, they will not trade at 80, 90 times again, and although you'll see it after 2 years, they'll again trade at the same valuations. So that's the call in my opinion. So I'm ready to answer your queries. Kindly use the super chat, super sticker feature that will help me grow the channel, that help you also ask me questions and eke out answers in greater detail. So Supreme Xpro India, a large investor bought it. What is your take? It's a very decent company, but again the business per se would be hit by high raw material cost and many other things. So be careful. Yes, a large investor do buy, but large investors have bought into pharma companies, have bought into consumer companies, and they have not moved, and you might know it. So one innovation driven company which is into kitchen appliances was bought by at least a couple of large investors, and it has only gone down since then. So be extremely careful by just buying because large investors have bought into it. See, my view on IB real estate is at this point of time, it is extremely attractive at around 60-64. But again, if I'm not very confident on real estate capex driven sector and everything, I won't say that they will do extremely well or the stocks will do extremely well. Rakesh, thanks for your contribution. Does it make sense to sell low conviction stocks with 30% loss and buy good stock for long term? Your views on LIC and Paytm? Paytm is an avoid. The business per se has problems in it. I don't think it can make profits at least for the next 2-3 years. So it may go to 800. I'm not ruling out a factor that over the next 1 year, 1.5 years, it may go to 800, but will again fall. That's one thing. Second, you asked about LIC. The valuations were steep, and that's why the government reduced the IPO price from 1130, 1150 all the way to, I think, 800, 750, something like that. And it got even hammered from there on in. Avoid the stock. Um, all life insurance companies are available for you. I think if you really want to buy into it, although I am not a proponent of life insurance, but if you really want to buy something like HDFC Life, fits the bill. If you really want to buy a bank, again, I'm not a proponent of it, but if you really want to buy HDFC Bank, is something to look at these valuations. Now, does it make sense to sell low conviction stock with 30% loss and buy good stocks? It depends what are those stocks. So probably if you want to have your portfolio reviewed, anything of that sort, you can definitely email me. That's one thing. Second thing is that if you really want to sell something, don't sell now. Wait for a rally. I feel can happen in July, and then a fall would happen. Wait for rally in those stocks, probably exit with a 20% loss. And when I say when, so I don't know what your definition would be for good stock for long term, but when I talk about good stocks or top qualities, how these are market leaders, high growth, high moat stocks with pricing power. Buy into these companies, forget about the market cap. Try to buy mid caps in that segment if you can find some. Otherwise, buy the large caps in these sectors for 5 6 years, you'll make money. All right. Laurus or JB Chemicals for long term. Both are good. Both are good. Laurus at these levels look good. JB Chemicals have always performed well over the last 4 5 years. May continue to do well. I think Laurus, I have looked at more closely at around 450, 460, 480, 460, all those levels. It looks extremely good. Okay, so TNU view on Jubilant Foodworks. Or my view on Jubilant Foodworks is again another stock that is attractively priced, but will struggle a little bit because of the high inflationary pressure. You have to understand that their main, although their main business is through Pizza Huts and whatever, sorry, through Domino's and whatever people come in and eat there. But their other major business comes from delivery, and delivery costs will be higher because of higher fuel costs. So the pressure will be there for the next 6 months, but I feel a major bottom has been made in Jubilant Foodworks. So if somebody wants to buy from a 3 year point of view, it is a decent pick at around 500 rupees. Okay. So, Dr. Lal, I can talk about Sheila Foam. I have not looked at recently with their numbers, etc. Although the numbers have dipped, that's what I know. But Dr. Lal, I feel cannot. I mean, it's very difficult to see it fall even more below 2018 and all those levels. Yes, there are issues with another player getting into the business fray, but I think Dr. Lal PathLabs, in my opinion, is a buy at these levels. If you have a 4 5 year time frame, long term time frame, it's a buy and keep on accumulating in this range. It might just stay there for 6 to 8 months, but then a good up move will happen. So that's the call. I don't have a view on rain industry. I would have to check in detail and then let you know. Not checked it from a long term, from for long. I think Tanla, well, I don't know. I am not that convinced with whatever they are doing at the moment and the kind of valuations it is trading at. Yes, for a trade, it can be bought with a stop loss of 1,000, target of 1,300, but long term, I feel the major run for the stock has taken place. We have been analyzing or looking at, or you can say, we have had an eye on Tanla from 30 rupees. I have been with it from 2016 and have sold at around 120, 150. But to take that apart, to take that thing outside, I would still say that 2,100 when it was trading at 70, 80 times, that is perhaps one of the highest, you can say, multiples given to an IT firm. And probably that will stay there. I mean, that high may just stay there for at least the next 18 months or so. So that's my call. So Sumitomo is pretty good. I think Sumitomo, the kind of numbers that it is putting out, I would not be surprised if it is at 550, 570 by next monsoon, by next September or so. I think if it has gone to 400 again, or 420, 415, 420, good levels to buy for a target of 550 in about a year or 18 months. All right, guys. Thank you. Thanks a lot for being online. Please like and subscribe my channel. Hit the bell icon so you can get my videos straight away when I post. Kindly support me on Patreon. Thanks a lot for watching.